Good afternoon, everyone. We are here to present about Asyad Shipping company performance and audited results for 2024. I'm joined here by the management, myself, Ibrahim Al-Nadiri, the Chief Executive Officer of the company, and I'm joined here by Mr. Ahmad Al-Khadouri, who is the Chief Commercial Officer, and Mr. Ahmed Shukeli, who's the Senior Vice President of Finance. So, this is recorded, recording. Yeah, right. Okay. So the presentation will basically come today with an overview of financial performance as well as the market outlook, and then it will be followed up with a Q&A. We expect a full 1 hour for this, where we will do the presentation in half an hour, and then the remaining half an hour is to basically take your questions and try to answer them to the best of our knowledge. That being said, maybe just to give you a view about Asyad Shipping. Can you see? Okay, with that being said, so basically we'll start with the management team for the company, and as we've presented this previously, but just only to recap that the executive management here is myself, Ibrahim Al-Nadiri, where I've been in the company for the last 18 years, and with 23 years in experience in the industry. Previously, I was also the chief operating officer of the company, and I'm mainly into shipping from day one with a background of a marine engineer. And Mr. Ahmad Al-Khadouri, who's the chief commercial officer, he also comes with an total experience of 23 years of experience, and he spent 14 years within the company. And he's ex-Oman LNG, where he completed his national SEO program as well, and has MBA, as well as a lot of other leadership courses. And then we have also our chief operating officer, who comes with 40 years plus of experience, and he's been with us for almost the last 3 years now. And he began his career in '82, and he's mainly ex-Maersk and V-ships. Again, comes with a wealth of experience in the industry. Mr. Ahmed Shukeli, who's the Senior Vice President of Finance, is also with similar experience like us of over 22 years to almost 23 years, and he spent 17 years within the company. Also previously, he worked for different companies here in Oman and completed similar leadership courses and financial programs, international financial programs. As you could see that for the top management of the company, we have a total years of experience of more than 100 years, and with the 26 years of experience for each of us. And then the average tenure for us is about 10 years, which is very important in this industry, where you have people actually from the industry working for the same company for quite some time. Of course, the company has also got a lot of recognition internationally, and with a lot of supportive shareholders like yourselves. So when we look at Asyad Shipping today, where we stand as a company, we are, of course, though we are a local Omani company, but we have a global reach and maritime excellence, and that goes with our strong foundation when we were established from 2003, and we have an excellent forward-looking momentum. We are focused on mainly 5 segments, and to name them just maybe in oil and gas and petroleum products or oil products, as well as bulk and container shipping. And this diversification gives us a good unique selling value and competitive value in the market itself, where also we look into our future readiness in terms of providing our fleet for any future challenges. Of course, as a company, we are delivering our growth with purpose, as well as you could say from our performance that we are also driven by a strong strategy. Last year by itself, we had more than almost 11 million deadweight. That is basically our capacity. And we also have, as of today, around 86 ships that is mainly owned and chartered ships with a good average age of fleet, and it's important to have our fleet as young as possible. Then in here in Oman, we have about almost 250 employees. And last year itself, we had a gross revenue of 366 million Oman Riyal, close to $1 billion. With an EBITDA margin, we continue also to have our strong EBITDA margin, about 59%, close to 60%. And in total, we're almost more than 2,000 people working here and on board our ships. And of course, being in this segment as a shipping company, we are very much within the logistics, and we are Asyad Group being the logistics arm of Oman and also the major shareholder of the company. Of course, this also gives us a good backing from the government itself, and also we are considered to be partner of choice for a lot of Omani companies and projects, including the like of Oman LNG, OQ, and many other companies here in Oman. And of course, internationally, we are also known as one of the deep sea transportation companies that have a good sort of capabilities. And our diversified fleet gives us also a good access to more than 60 countries around the world. And we are fully integrated in terms of operation, where we have our own technical and commercial management run from here, from the office in Oman and our branch in Singapore. When we look at the company itself today, and we think about it, as I said, we are active in more than 60 countries around the world, but we are also, we have a lot of port calls. So last year by itself, we had more than 900 calls, port calls to different ports around the world in these 60 countries. Of course, the strategic position of Oman gives us a good access to the global trade lanes, and also it makes Oman as a gateway to the MENA and the Indian subcontinent market. We, as a company, of course, active in this shipping industry, we are very active in terms of partnering with a lot of well-known stakeholders and well-known companies in the world, the like of Shell, BP, Senecor, and that also gives us access to different parts of the world. We do also have vessel sharing agreements with top GCC companies when it comes to our container segment. Our bulk carriers as well as oil tankers, and these are the crude oil tankers, they give us also a good pool of structure. And as I said before, we have, besides owning the ships, we do our technical management in-house, and we do our chartering management from here, from Oman, as well as from Singapore. And we are, of course, being as Omani company, very much into Omanization and making sure that we have the in-country value by recruiting as many professional Omanis as possible, and to ensure that we develop them to take the challenge when it comes to this industry. When we have seen that there's a growing Omani crew going on board, very steady in terms of our progress when it comes to our strategic project. And we will always maintain a diversified fleet, though we will have a good presence in the oil and gas, but we will maintain a diversified fleet because that also gives us a lot of immunity when it comes to the turbulences from time to time in this market. Our diversified also commercial deployment capabilities includes not only chartering ships, but also contracts of affreightment and other partnership with different parties around the world. Of course, being a company in the shipping, we need to be also very vigilant when it comes to our ESG and governance. Mainly today, as a shipping company, we have our own goals that we align it with Oman goals for the net zero by 2050. We have achieved good carbon intensity reduction and year by year. And though we set like 2%, but we normally beat that target and go beyond it. But it's good for us to maintain the 2050 target. In terms of our environmental protection, alhamdulillah, so far we've been keeping and maintaining a clean record when it comes to the marine pollution. Our ships are safely sailing around the world with zero incident when it comes to marine pollution. And of course, we continue to contribute to the local Omani society in terms of in-country value, whether through creating jobs, developing Omanis, or also getting stores and spares from Oman, Omani partners here. Our partnership with communities, of course, we maintain a nice and great safety record. So we maintain we look after our crew and ensure that the culture of belonging is always present in our industry. Of course, as a vigilant company, we maintain a robust governance. They also being a public company, that governance is also very important for us. And we maintain a clean record and full employees signed code of conduct of about 100%, or of 100%. We maintain that throughout the years. And of course, we have a lot of rules and regulations that we have to comply with, and we do that voluntarily because we believe in the message of shipping around the world. Of course, to do this, we need to align with the rest of the industry in the world. The UN development or sustainable development goals are there. We are in compliance with 9 of them. These are the 9 that are related to shipping, and for that we've been of course recognized by a lot of international bodies, and we've issued our ESG reports for the last couple of years, and we'll be issuing our ESG report for 2024 in the very near future. With that being said, maybe I'll leave you with Mr. Ahmed Shkeli to take you through the financial performance, and we'll take it from there.
Thank you, Dr. Ibrahim. Hi, everyone. Just to explain, I think we are proud about our performance for 2024. I will start with the explanation about the revenue, then the cost analysis, then the net profit of the company, and also high-level explanation about the balance sheet of the company. So starting with the revenue, we have seen a steady actually achievements during the year. There is a strategic feasibility of this, and sustainable revenue managed to maintain 366 million we have achieved 2024. This considered very, very good achievement during the difficult year also, because as mentioned by Dr. Ibrahim, because of our diversified portfolio. So you can see from the chart in the right-hand side that some segments they did not perform well, but the other segment they balanced to set off those. They offset the reduction in those segments. So we see that product shipping and also the liner, they really compensate, and they were a strong performance during 2024. While there is also small reduction in some of the segments. The crude shipping, we have sold actually in 2023 3 ships, and because we have chartered to 2 Suezmax and 1 Aframax at a very competitive rates, we managed to also bring the segment to a very good level. And also we time chartered our vessels in the crude segment, good portion of it in the market, because we want to secure a long-term cash flow and a long-term also sustainable EBITDA from this segments. In the product shipping, where it was a remarkable performance, that was actually driven by increase in number of ships we have chartered from the market, and also we have access to more routes and also suppliers from China specifically and Southeast, because we have have our own company and office in Singapore. We have a close access to our clients in those markets, as well as also other international markets. We were being very visible in those markets. In the dry bulk, while there were a drop, we managed to maintain very good achievement because we chartered a lot of more ships during the year to ensure there is a good volume and a good number of ships to satisfy our customers, and we don't also get impacts because of the market going slightly down. And we managed to renew some of our COA with a very important clients, and we triangulate our ships accordingly because of that COA. In the gas sector or gas carriers, where actually we have very good performance, and we have 3 contracts renewal during the year, and that we consider it's a very good achievement. And now we can see it also taking us for continuing us on that achievement. So, and also we finalized during the year time charter agreement with Oman LNG that would start in 2026 for renewal of the old LNGs we have. Finally, which was also very, very strong performance from the liner segments. It has actually make big losses in 2023. We saw a very good performance during the year, which we turn off to be a profitable segments, and also offsetting other segments low performance coming also from the liner shipping. And that's, of course, mainly because of the shift of expansion in new market. We have also chartered out some of our ships in a very good and competitive rate. 2 of our ships in the container, we have chartered them, as well as we have access now to China, Thailand, Vietnam, Indonesia, and Red Sea services that was boosted the revenue in 2024. We can notice that the highest segments, mainly crude and product shipping, they are more than 50% of our revenue because of the number of ships, also because of our access to a lot of customers in those segments. If we go to the cost analysis, I think we have really done very well here. So there is an increase in the time charter contracts in 2024 and reducing the voyage cost. So you can notice in the first chart that the voyage cost has dropped a lot, almost 30 million less, 30 million Oman Riyal less. This is because we have, as mentioned, we have secured a lot of ships to be a time charter agreement instead of the voyage agreements. This is mainly because we noticed the market a very good position to secure a lot of good contracts, and we have done that, which was also very good move from the company and also adaptable to market trends and industry cycle. Of course, also we improve our cost efficiency by the other side to make sure that the volatile market not impacting us heavily. The vessel operating cost increased slightly, and this because they were increasing the crew expenses and also maintenance and repair during the year. So there is a lot of inflation, and cost was higher in this 2 area, and that's why we can notice there is a slight increase in this. We are putting all the measures and all the requirement to make sure the control is well controlled. As well, the charter hire cost, we have dropped that while we did actually a lot of long-term contracts. We can see that the depreciation from chartered vessels increased, and accordingly, those vessels we charter for long-term, they will impact the depreciation more in the chartering, and as well, there will be a charter hire cost less because we charter less in the short term compared to the long term during 2024, and that's why there is a drop in the charter hire cost, while there is a big increase in the depreciation cost, because that also we want to position ourselves and also secure a very good contracts in the long term with this some of the vessels. The owned ships, because we have sold 3 VLCC end of 2023, we can notice a drop in the depreciation from our owned vessels, and that's as per normal calculation of depreciation. The admin cost was well controlled, and still only 1 million increase during the year, while there is a lot of additional things also happen during the year. So we managed to really make sure that there is increase in the fleet, increase in the office also in Singapore. We are expanding while we maintaining the same, almost similar administration cost. So that's well achieved. The finance cost also we managed to reduce because we pay a lot of good amount of our debt, while the SOFR or LIBOR was increasing, but we still maintain a very good control in the finance cost. So that's of course moved us to reach to a very good level during the year. If we go to the net profit point of view, where we have resilient performance, and of course we notice profitable results. All segments, they make profit during the year in 2024 compared to 2023, where the liner business were making losses. In 2024, all of them, they make profit. So 52 million Oman Riyal, despite the uncertainty and challenging market condition. And you can notice the drop in some of the segments. We still make a very good profit, mainly driven by the product segments, increased by almost 2 million, and container, where it turned around from 53 million losses to almost 2 million net profit. So that's really offset the net profit, and we managed to achieve more than the last year. So 52 million compared to 39 million last year. You can see from also the ratios we have mentioned here, the net EBITDA margin, which we are really have managed to achieve a very good level, 59%, and compared to 58% last year. This is from gross revenue point of view. And if we go by time charter equivalent calculation point of view, the adjusted EBITDA margin, we have achieved 69% this year, slightly less than last year. 74% was last year. This is still very competitive and very actually market leader in achieving such EBITDA margin. Net profit also, the margin from net profit is increased. So 14% as a net profit margin compared to 11% last year. That shows that how committed we are to sustainable growth and profitability, and of course shareholder value. Going to the balance sheet high level explanation. So we say we managed to win actually in a very tough market in 2024. So total assets decreased by 7% due to the depreciation, also repaying of some of our loans. So because the cash was less, because we pay a lot of good amount of our loans during the year, and also we depreciated our assets while the new assets was not yet came to the fleet. The total liability, you can see that it was reduced by almost 15%, and that's really improved the financial position of the company. Net debt to EBITDA ratio improved a lot. So you can see it's 1.4 times compared to 1.6 times in 2023. This put us really in a very good position, and also highlighting the stronger earning performance of the company and strong debt management. Also, we lowered the gearing ratio, so it was 74 in 2023, improved to 65% in 2024. So that's of course allow us to do more investment opportunities and also prepare the company for the future growth. The asset turnover, which also improved 34% compared to 31% last year. So that's considered a very good rate for the size of our, while we are decreasing the asset size, we are still managed to achieve very good ratio. Return on equity, of course, also increased to 11% compared to 9% last year. And also return on assets as well as improved 4.8% compared to 3.4%. Debt to equity ratio also improved to 1.2 times compared to 1.5 times. That's of course show the strong tangible net worth of the company, track record of enhancing the balance sheet health of the company, as well as also delivering a very strong return on investment to the parent company and also the shareholder value. Now I will ask Ahmad to continue the presentation.
Yeah, thank you, Ahmed. So, with regards to the market outlook, I think that it's prudent from our side to start off with the US TR Section 301, which is primarily affecting shipping, mainly because of the Chinese aspect of shipping in terms of building and operating. So overall, just to give investors a brief and an update, that back in January, the U.S. administration had some regulations that they had published, which affected ship owners globally, especially the ones owning Chinese ships. Then in April, they issued another regulation that made it much easier and straightforward for ship owners. So the implication initially globally was between 40 to 52 billion worth of measures like penalties that would be levied on owners. And then that was diluted to 12 to 18 billion. So overall, where we are today is that we are waiting for the next publications of the US TR, which will be coming in May, and hopefully that will impact us less overall. So just as a summary, in terms of the implications for shipping, it has softened. So in the sense that it had made it much easier for companies calling the United States. So there would be certain exemptions on the number of port calls, the cargoes that are being carried out of the US. So for information, that oil and gas cargo is not taxed, making it easier for these commodities to be exported out of the US. And in terms of the Chinese content of the business, if you are not a Chinese owner, then that makes it much easier for you to call the US. So us, as Asyad Shipping Company, we don't see much, threat to our business calling into the US, because we usually don't call the US quite often. And even if we did, our ships would be on charter calling the US. So any implications of costing would be borne by the charterer, not by us as Asyad Shipping Company. So from that perspective, we are more or less in the safe zone, loosely speaking. Moving forward in terms of the market outlook. So we start off with the crude market. Now, the fundamentals of the crude market, again, as we mentioned in our previous presentations, that there's a gap between fleet aging 15 years and older, and new ships coming into the market. So we can see the gap that's there, which has affected us positively, especially in our VLCC fleet, where our earnings are above the average that we have witnessed. So the averages initially were around 39,000, but now what we're seeing is numbers in the 40s. So we have offers of chartering our ships close to the high 40s, somewhere around 46, 47, 48. So this gives us a comfortable revenue stream in the VLCC segment. From the short to medium term, we see that the VLCC segment, which is one of the main pillars of the company, is doing well and is quite solid. And we have our deliveries coming next year, which would further strengthen the earning days that we will be encashing on as we move forward into 2025 and 2026. Moving on to the product side of the business. So this is the segment where we transport clean petroleum products from diesel to naphtha to jet fuel, palm oils, etc. What we see over here is the demand for product tankers growing as we're moving on in the upcoming years. However, what we also see is that there's a lot of deliveries coming from owners into the market. So us as Asyad Shipping Company, what we've done is that we managed to charter out our ships where we have a hedge on the earnings in this particular segment. So this had a positive return for us in Asyad Shipping Company. But what we see also is that moving forward, again, there would be a abundance of older ships in this segment, but it will take a little bit of time until these ships are moved out, because in the product segment, ships move or age up to 18 years plus compared to the VLCC, where their target age is around 15 years. So here in the next couple of years, we would see a little bit of adjustment, and this is something that we're very cautious of. And what we're doing as a strategy is that we will charter in a ship backed by a contract, making it more favorable to us as Asyad Shipping Company. And on the other hand, we have our own product tankers, which are more or less paid off. So whatever we would be earning in the market is mainly in the positive territory in terms of earnings. So we're quite comfortable in the tanker space. Moving on to the dry bulk segment. So in the dry bulk segment, what we see is that it's softening in 2025. We see that even though the demand for commodities could be increasing, but the rates of ships isn't growing as or earning as would be expected, at least for the short term. However, this is an opportunity for us in Asyad Shipping Company, because this is where we would be able to go into the market and acquire ships at a competitive rate and make it more feasible for us as Asyad Shipping Company operating in this segment of the market, where in this market, specifically in the dry bulk, there are different commodities. So it's not like the tanker space where the commodities are around 3 to 5 to be transported. Here you have an array of different products that can range all the way from grain to coal, which we are quite active in. So in this segment over here, we see that the market in the longer term proves to be positive, especially that the implications of the US isn't so drastic on the dry bulk segment compared to the other aspects of the business. Moving on to the LNG side of the business, what we see is that, again, the demand for LNG continues to grow. Currently, there is a delay in some of the projects globally, which has put pressure on ships, modern ships in the market. With us in Asyad Shipping Company, we have ships coming next year, and they will be on long-term contracts with Oman LNG. And also we have another older ship that we have, which is already fixed up to 2030. We have our other ships that are currently trading, and these ships are of older technologies, but they already have contracts with them at least until the end of the year. We see some extensions coming in 2026, but overall we'll be modernizing our fleet in the LNG space and growing our fleet with contracts either with local exporters or also with exporters coming out of the US and exporting into Asia. So overall, in terms of the segments that we're in and the market outlook, we're very much in line with our fleet and the different segments that we operate in. And there is a very much comfortable base for the businesses that we're running in. And we're looking at certain projects in order to increase our earning days in the tanker space, which will be supporting our growth and also supporting our P&L as we move forward. So overall, from that perspective, we see that the first quarter was good for Asyad Shipping Company, and 2024 was also a very positive year for us. Thank you. Question and answer?
Yes. So thank you very much. This is basically our presentation, and we're open for questions from your side. Stop recording. Sir, this one is stop presenting. Stop presenting. Yes. Okay. This one. There's Jose Matthew. Also his son. Yes, Jose, please go ahead.
Good afternoon, gentlemen.
Good afternoon.
Thank you very much for the presentation, and congrats on a good set of numbers despite the challenging environment. I have a few questions, but the first question is on, could you please touch upon your fleet development plan? Because you had mentioned earlier that you had plans to add around 4 bulk carriers in 2024, but I understand these plans were scrapped because of price pressures. And in 2025 also, you have some plans to add around 7 vessels, 7 new vessels. And you're already adding 2 vessels right now, and that is already announced. Congratulations on that deal. So what are the plans for Asyad in terms of new vessel additions? So are we likely to see total 11 vessels added during the course of this year?
Yes. So in terms of the fleet expansion, as we explained earlier, basically we're expanding in all of our different fleets in different time frames. So as of now, in terms of the fleet expansion, we have focused on the tanker side, especially that the market is thirsty for VLCCs, for crude transport. And the numbers that we're getting in this segment are very favorable to us, not only to us, obviously to all shipping owners. So this has taken priority over others because the other segments, the returns that we're seeing in the market isn't as strong, but it doesn't mean that we're not growing because we are chartering in ships in order to compensate the requirements of the market. But where we see a good return on investment, especially with the acquisitions that we make from an IR perspective, that the crude segment is very strong, especially from now to the medium term, because of the aging aspect of the current fleet.
So that's thank you for that. That's a general overview. We got it, but during the IPO, you had mentioned you had a timeline for ships to be added in 2024, which is not added, and 7 ships will be added in 2025. So, are you still sticking to that plan, or is there any change in that?
Yeah, so we're sticking to our plan, definitely. It's just that within the year, which one takes precedence over the other. So initially we were thinking maybe that we will be going for the dry bulk ships earlier, but then when we saw the change in the market dynamic, especially with the U.S. administration coming, we realized that it's time to get into the crude segment, especially with the demand being spurred by the changes in OPEC and the different geopolitical aspects that are going on.
Sure, got it. Thank you. Another one is on the number of vessels. During the IPO time, the number of vessels that were publicized was around 89, but you're now talking about 86 vessels right now. So could you please tell us if there is any vessel sales that happened during the course of this time?
Yeah, so the number of ships that you had were all the ships that we were operating, which included owned and chartered in. So at that point in time, we had 89 ships, and then we had returned some ships in the market. So it's driven by how many ships we have under our operation, depending on the contracts of transportation that we have. So it's gone down to 86, but we're currently in discussions to charter in another few vessels. So it could be going up to maybe 90 or beyond, and then could be reducing again in the market. It just depends on the timing of when we publicize how many ships are under our operations.
Plus also, Matthew, preventing the cutoff when we take the number of ships. So we take it as one year end. So as mentioned by Ahmad, we already redelivered some of the ships. So that's why at the cutoff, it was less by 3-4 ships. But of course, we keep chartering from the market, and also our new ships will come in 2026.
Perfect. Got it. Thank you. Another question that I have is on the structure of the new vessel acquisition. Is it an outright purchase, or are you leasing it from some other shipping agencies, or what's the structure that you have entered?
The new one we announced in the market, we are buying it fully. So we will be the owners, not leasing it from the market. We are owning it.
Okay.
In hand ships, we purchase it from the market directly.
So how are we funding for this?
Funding, of course, we have many options, and we already have also we are also having RFP for funding the existing new build ships that's already in the market. We could extend our also existing RFP in the market to fund this too, and or we can also do any other way of funding. Of course, we can do a bridge loan at the start until we use our own cash to pay the current owner until we have a long-term financing, which should be done in 2025 itself.
And what's the age of these two fleet?
They are 5 years old.
Okay, 2020 or maybe
2019, 20.
2019, 20. Okay. And do you have any plans for decommissioning any of the other tankers right now, because the new ones are coming in? So
of course, those as per our assessment and the opportunities, we cannot disclose anything now. It depends on the opportunities. We assess as a management, our board, once it's approved, and of course we have a pipeline to buy more ships as per our business plan. But as mentioned by the team, it depends on the timing and the right assets we want to acquire.
And on the gas shipping segment, most of your vessels will go out of contract in 2025 and 26. You have earlier mentioned that the vessels will be looking for work.
Yes.
Adding to so what are your strategies for looking for work for these vessels? And adding to this, another question that I have is, from among your fleet, the gas tankers are like 13 years average age. So if they go out of business end of 2025, and since they have a higher age, I just wanted to pick your brain on, is there any possibility of potential impairment provisions that will come up in 2025?
We are assessing all the options because those are some of the contracts already renewed, some of them last year renewed. We are also in discussion of renewal of some contracts also. 2 LNGs we're already getting from Oman LNG, and that will be starting 2026 as a renewable in this segment. We are also assessing some of the if the market is supporting sale or not supporting sale. We are assessing all options. We don't see some huge risk on this yet. We are still validating, of course, the numbers and everything. It's too early, I think, to mention anything in this regard.
Got it. Thank you. And on the liner segment, your performance has been very good in 2024. But what I'm observing is there's a slow run rate during Q4 2025, which is now you've been averaging at around 14 million revenue into first 9 months and for the quarters, and Q4 has been around 11 million. So could you please throw some light on what's happening on the liner segment, and also how is the first quarter and during April, how the liner segment has been doing in terms of rates, in terms of utilization, and as well as revenue?
I think we are focusing in this presentation about 2024. To discuss this, of course, will come in the semi-annual presentation we will do for all investors. We didn't disclose such information for anybody yet. So we are being asked by our legal team that only whatever disclosed to the market, you have to only explain. But I can explain that as per our budget for Q1, we are still within budget. We expected a slowdown in the first quarter, and as per our experience in the market, this is what I can say right now.
Sure, appreciate that. Another last question that I have is
because maybe others, I'm not sure, maybe others already they want to ask. If there is a time, we can come back to you.
Sure. I'll pause here and I'll let others ask the questions.
Thank you. Okay, ladies and gentlemen, any question? Another question? Yes, Shawar.
Yes, hi. Thank you for the opportunity. I just had one question, quick question. There's a deferred tax expense charge to your income statement this year. Would you care to elaborate what is that, and is it likely to, is it settled now, or is it likely to come in the future as well? Thank you.
Okay, I think thank you for the question. It is a very good and important area. Of course, we have, as we mentioned, we have sold some of our fleet in 2023. We have sold in 2022 other fleets. So we have recorded a tax income that time. So we have recorded a deferred tax assets in our balance sheet. And in 2024, we decided to also the expenses and those things increase. So accordingly, we offset and we pay more dividends from our SPVs. So to make sure there is no tax also and cash flow impact from tax, we offset some of this carry forward deferred tax. So accordingly, there is no tax impact. However, also this you can carry forward for 5 years. So we have to utilize those the tax you're already carrying for since 2022 or even earlier. So accordingly, we have done that in 2024 to make sure also the company is ready to have a sufficient return earning in 2025 to pay the dividends for the existing and new shareholders. So in the parent company. So we have done that intentionally, and we have realized some of the deferred tax assets carrying for previous years. I hope I answered your question.
Yes, wonderful. So thank you. I just had a follow-up question. So the management guidance that was in the IPO prospectus that the effective tax rate is expected to be around 2%. That continues, right? This reversal does not change that?
No, that still remain, because this is based on the consolidated level, and a lot of our companies are outside Oman.
Perfect, great. Thank you.
Okay, thank you very much, Shawar. Is there any? Yes, Gaurav, please go ahead.
Hi, thank you for the presentation. I had two questions. One, the two new vessels that you recently announced acquiring, are these anticipated to be on any contracts once you acquire them?
Yeah, so Mr. Gaurav, basically these two ships that we have acquired already on a contract, and we will be most likely continuing with these contracts for the next 3 years because they're on a good rate. So we're negotiating an extension of the good rate for the next 3 years.
Okay. And just going back to your financial performance, if I'm not mistaken, I noticed the profitability for the crude segment has been lower in 24 versus 23. Is that right?
Yes. And the crude things, of course, as we explained, that we have sold 3 VLCC in 2023, and we have make a gain of almost 18 million real in 2023. That gain is not there, of course, as one-off in 2023. So that gain is not there in 2024. Additionally, we have recovered also a lot of, we have reversed a lot of bad debt, which we have written off before in the same segments, as well as we have also agreed with the taxation authority after the announcement. So we have booked a provision in the withholding tax, which we managed to recover in 2023. Those are all one-off in 2023. It is not there. In addition, of course, the vessels become less in 2024 in the crude segments. So accordingly, the profit expected to be also less because there are less capacity days in the segment. However, still we maintain the same, if not higher, TC rates from the segments, but because the capacity days was less because we have sold, and those one-off is not there. Of course, as I mentioned, we have chartered the Suezmax and Aframax in that segment during 2024, but not from the start of the year. So their performance was partially to offset some of those reduction in the segment. We expected 2020 also 5 to be also a very good segment from the crude. Additionally, also we have noticed that, as mentioned by Ahmad in his explanation, that there is a good TC market in the crude, and accordingly we have secured some long-term contracts in 2024 to ensure the feasibility and also long-term profit and revenue coming from the crude segment. So accordingly, that you can see maybe the profit is less, but it is a longer period compared to previously. So there is a lot of course, elements, but that's in a nutshell the reasons.
Okay. And in the liner segment as well, in 23 there was a large loss. Was that one-off item?
There is an impairment, of course. We have done of right of use and also operational loss. But of course, the impairment was high, which is one-off, not in 2024. And you can see that it was flipped actually to be a profitable segments. What we have done also in 2024, we have TC out some of our fleet with a very good rate in end of last year. And also some of them were from the start of the year, April and those things. So they were performing better than operating the vessels ourselves.
Okay. And if we adjusted for these one-off items impact in 23 across the different segments, what would be the like-for-like comparison in terms of profitability improvement?
I think 2023 will be, I think we have done that. Almost same if you remove the one-off, because they were on board impairment and those things. Yeah. So almost similar. So 24 was also, if you offset also the deferred tax assets as well, it would be very good year.
Okay, sure. Thank you.
All right. Yes. Yes. I think Demetrius, can you please?
Yes.
Yeah.
Hi there. First of all, thank you very much for your presentation. Very much appreciated. One question from my side, mostly sort of related on the geopolitical sort of aspect. My question is, in light of the ongoing geopolitical developments globally, especially on the key maritime corridors. How is Asyad Shipping sort of reassessing your fleet development priorities and any capex planning, to ensure resilience going forward?
Yes. So we will basically, of course, as I said, I mean, we will continue in terms of our business plan, mainly because it's been done and studied nicely. Of course, we will continue also evaluating the risks every time before making any sort of investment of any capex expenditure. Saying that, of course, there are always alternatives to avoid certain corridors where we can have our ships basically deployed in different corridors. As you may be aware that we are also a ship owning company. We charter ships out, and we don't own cargoes. So it's actually the charter's choice, of course, to choose or select the corridor. However, because these are our own assets, we have the final say in terms of whether we allow the ships to go through certain corridors or not. And we do that, of course, by ensuring that the full risk is looked at, and we're basically trying to see if there are ways of mitigating these risks. And if not, then we basically tell the charters that this particular corridor is not approved for us. So there are ways of doing it. We have our own risk management team. We have our own technical management team as well as the commercial team to sitting together and trying to assess any risk that can be involved in any of our ships' activities while sailing at sea. So, but we are not away from the rest of the world, of course, when it comes to these challenges. So we also deal with different bodies around the world to ensure that whatever decision we make is aligned with the international best practices in order to save our ships, our crew in the first place, and our ships, of course.
Understood. Thank you very much. And if I may, one second question from my side. I mean, Sumitrust is a Japanese institution, it's a Japanese bank. And so the question relates mostly on your joint ventures and if you're planning to expand predominantly as Asyad Shipping, or if you're going to seek any joint ventures as the ones you had established on the LNG side, for example.
Yeah, thanks, Demetrius. Yes, in terms of having joint ventures, we're very much open to having joint ventures with other ship owners or financial institutions. And this is something that we are in talks, especially on the gas side. So it's something in the pipeline, and hopefully things materialize. And once it does, it will be announced to the market.
Understood. Thank you very much again.
Thank you. Thank you. Thanks. Okay. So I think maybe we've reached to the 1 hour time. Would like to thank you for being there for these things, and we hope that we've answered the questions well, we did actually answer to the best of our knowledge, but we hope that we have given you the clear picture of what's going on and about our performance and what we intended to do in 24 and what we have achieved as well. And hopefully we look forward to seeing you in the next meeting, maybe 6 months later. Yeah. Thank you very much. Stop recording and stop recording.